Welcome to Wealth Creation Investing. In this training session, we're going to have part 2 with Forex Joe of the Forex Trend Following Swing Position Player's Bible for Massive Long-Term Success. As I put up this disclaimer, if you missed out on part 1, you should go back to our archives. This was done recently, and you can review part 1 before continuing with this video. As I continue to show the gears, as we talked about in part 1, as a trend follower, you need to know which multiple time frame that you're using. If you go all the way to the left, which is a 15-minute chart, many scalpers and day traders might use a 15-minute, 5-minute even, or even a 31-hour chart. Many of the swing traders might use a 1-hour, a daily, weekly, and position traders might use a daily, weekly, and monthly. Everything that I do here for FX Trade Alerts begins with that daily gear. I look at the previous 24 hours, I put all the information down for everyone to use, and we move forward looking for opportunities at certain areas or my proprietary numbers for 2 out of 3 or 3 out of 3 channels to get involved as a swing position trader. Now I also put out information on these Forex Trade Alerts that includes scalpers and day traders, and they have been tremendously accurate, and I thank everyone that sent in emails. Let me know how happy they are using these alerts. Well, as you continue to use the alerts, as you continue to learn our software that we've given you, and as we continue to use the upgrades that's going to be forthcoming, you're going to have light bulb moments in the most liquid market on earth today. When I started back in 2001, the Forex markets were about $1.5 trillion a day. Just recently here in the last month, we have figured out, due to research, that the Forex markets are now trading at around $4.7 trillion a day worldwide. These markets cannot be manipulated. If you look at the 4 majors and then the 3 mid-majors, most people look at just those 7 pairs. We cover 22 pairs instead of thousands of stocks. You are trading money for money. One currency pair will be strengthening, one currency pair will be weakening. It is a wonderful process to be able to participate in the Forex markets. Now, as we talked about in part 1, price makes news, not the other way around. You must be able to dissect rumor versus fact or aberrations. And unless you gain vast experience, many of you will never be able to accomplish this task. That's why we ask that you only pick one currency pair to stock and learn everything about that currency pair during your journey. Once you're able to generate positive pips from that currency pair that you're stocking on a consistent basis for 3 months, you are ready to go live. Now, the markets go where the markets go, or the markets is what the markets is. It's a pretty simple concept, but trying to figure out a $4.7 trillion a day market and be right when you're a retail customer leaves us at a huge disadvantage. What it does allow us to do is look and pinpoint certain areas of substance that we will be able to generate positive pips on a consistent basis. That's where I come in using my proprietary methods, including probability factors. Those of you that's been following these probability factors are learning that if you give the Forex markets a quality of attention, then you are going to be able to participate long term in the most liquid market on earth today and have an advantage. The traded price can't be fixed and is the only number to believe. Sometimes I like to say, mine is not to reason why, but to wonder why the Forex markets are doing what they're doing. But when you're taking a look at commercial banks, central banks, hedge funds, huge traders that might be trading billions of dollars, they're going to have a lot more of effect than me as a minnow swimming around in a shark tank. I am just trying to get positive pips on a consistent basis without trying to overanalyze. Too many people try to overanalyze the Forex markets and then they get stopped by paralysis by analysis. Price is what traders live and die by. That's why we talk a lot about price action. It's what traders live and die by, because unless you have movement, and we're looking for volatility in the markets because volatility gives us opportunity as trend followers, then the bottom line is that if we don't have movement, we are unable to produce any type of positive pips that turns into money. You need to go with the flow. You need to leave your personal and fundamental opinions at the door because they don't matter. The markets could care less what you think, what I think, or what anybody else thinks because the markets go where the markets go. Ladies and gentlemen, trend trading can be predictive, especially if you are a swing position trader looking at a daily, weekly, or monthly charts. I call them the three big dogs. We're looking for these three charts to match up and go in the same direction. That's when we can have a tremendous amount of success. But in some instances, you might have the daily chart going in one direction and the monthly chart going in another direction because it might be a retracement or an oscillation. You must learn to understand this if you're going to become a full-time trader. For those of you who do not want to learn these concepts, then you absolutely positively need the Forex trade plan alerts, along with the software that protects you from your emotional, fear, and self-doubt problems. Now, John Henry, he was one of the best trend followers over the last 20 years. He ended up buying the Boston Red Sox. They broke the curse of the Bambino, so to say, and they won 2 world championships here in the last decade. He believes that an investment strategy can only be as successful as the discipline of the manager to adhere to the requirements in the face of market adversity. How strong do you believe in your concept? Well, if you have rules of engagement, we have rules of engagement for everything, then there's only 2 things you can do. You can either scale in and scale out of trades, which we call continuation, or if the markets reverse, at a certain point, you can then start the process of going the other way and meeting at the 50% point. Now, some of this might not make any sense to some of you that are new traders. It doesn't matter. Get involved with the FX trade alerts and learn how to participate and then start your studies. It's very easy. We keep it simple. It's all about numbers. You don't have to be a huge mathematician. It's simple numbers, simple math that you learned in 5th and 6th grade. Ladies and gentlemen, you're going to learn to practice, and then from that becomes a disciplined approach. But a practice regimen is what you need to accomplish. You're going to be retraining your subconscious mind on a consistent basis to create new habits. You see, John Henry's concepts must have worked. As I alluded to, he bought the Boston Red Sox and won 2 World Series in the last decade. They were able to take traders off the street and find traders using their concepts and put them to work in his firm. Now, as we've talked about, trend followers are in the moment. They are in the now. They could care less about what has happened in the past or the future. They're looking to see when the trend begins, and they often arise from a flat or oscillating market that is consolidating and going sideways for a period of time around a certain set of number or area. Now, those of you that don't know what those are, you have somebody that's been in the market since 2001 and that will locate those areas for you. That's the advantage that you have in the Forex markets. The idea is to take small bets or small plays early on in a market move to see if the trend does mature and get it big enough to make you and generate positive pips and earn big money. You see, basic strategy that all trend followers try to systemize is to cut losses short and let profits run. We figured out a long time ago using many surveys and by reading that most humans are unable to accomplish this task. They just want to let the losers run because they can't stand it, and yet when the winners take off, they're ready to stop out the trade. So that's why I created the gravy trade method that allows you an opportunity to take profit 1, take profit 2, and let the last lot run and take all of the decision making out of your hand except where is take profit 1 and take profit 2. And the minute it hits take profit 1, it moves your stop loss to break even +1. You see, trend followers ride the trend as far as possible. You never know if it's going to be 100, 300, 500, 1,000 pips, 2,000, or 3,000 pips. I've seen it happen with traders many times. Now, in looking at the long term, we talked about change is constant. Because change is constant, uncertainty is constant. That's what we're going to be embarking upon here in 2013. The fiat system has never worked long term in any market in the world, in the history of the world. That's what we're currently under. To overcome what's taking place, the printing presses continue to print money. From uncertainty, trends emerge. This is why I love being in the Forex markets instead of the stock market, because you're always going to have a currency pair that is strengthening against a currency pair that is weakening. So we're going to try to exploit people's reaction, which is embedded in prices, and this leads to trends. All the cutting-edge technology and news-gathering capabilities in the world are not going to help you trade trends. It just does not happen. People dislike losses so much that they continue to make irrational decisions and vain attempts to avoid them. And that's what you're going to find yourself doing if you are not experienced in trading. Some people have early success, and when they have early success, guess what happens? They think that they're smarter than the average bear. They don't need any more training, and they go off on their own and they lose everything. This is something that needs your full quality of attention consistently, but you're playing in a $4.7 trillion a day market. Why wouldn't you want to continue to have a coach and someone to guide you? You see, it's human nature to take the profit from a winner quickly on the assumption our win won't last for long, and stick with a loser in the futile hope it will bounce back. This has been the mantra and the cry for most inexperienced traders since the beginning of time or trading. The problem we have with accepting a loss is that it forces us to admit we are wrong, and we never, ever, with all of our competitive natures from growing up, want to admit that we're wrong. You see, humans don't like to be wrong. It's in their DNA. You heard me talk about in part one, if you don't have losses, you are not taking risk. Well, if you have losses, you must learn from the losses, which allows you to understand the winners. If you don't risk, you won't win big. This gives us an opportunity to hide behind certain areas or certain numbers that will generate hundreds of pips once it bounces off these numbers. Losses aren't the problem, it's how you deal with them. I've seen too many people spend major time on minor things like losses. I've seen people spend several days fretting over having 3 or 4 losses in a row. All you have to do now is learn about calculated risk. If you understand calculated risk, then you're going to win long term. From error to error, one discovers the entire truth. That's what Sigmund Freud once said. From error to error, one discovers the entire truth. Now, Richard Dennis, who's retired, says when you have a position, you put it on for a reason, and you've got to keep it until the reason no longer exists. But if you don't understand the reason, and you're following, and you're a beginning student, then you must gain vast experience until you understand if you want to become a full-time trader. The value of a disciplined trading approach is that it allows you to design your strategy during non-stressful times. That's why I love the swing position trading style. You can be 12, 18, 24 hours, 2 or 3 days, sometimes a couple of weeks in advance. The time to think most clearly about why and when to exit a losing trade is before you ever get in. You need to have a predetermined entry and exit strategy. Big moves are always on the horizon if you are simply reacting to the market and not trying to predict it. You see, there are a number of behaviors that will almost guarantee losses in the markets. Most of them are negative behaviors. And unless you make the Forex markets to where you give it quality of attention, you're going to be part of the statistics that continue to lose. There's no reason for trading other to make money. And if you're going to make money in any endeavor, especially a lot of money, to where you might be in the upper echelon of wage earners, then you have to pay a price. It does not come easy. You heard me say that Jim Rogers says one of the biggest mistakes people make is believing that they've always got to be doing something. What I love about the swing position and trending followers is that you can be patient and wait. Keith Campbell says we are trend followers, not trend generators. We are not trying to force or generate the trend. We are trend followers. If you will take that into consideration in your goal of becoming a successful trader for 2013, then we'd like you to take a look at our Forex alerts, and in the process, see if there's any value or synergy between the two of us. I want to thank you for taking time to attend this video webinar. Take time to research the Forex markets, the most liquid market on earth today. And until the next time that we meet, my name is Forex Joe, and may all the pips be with you. Godspeed.